following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 26th day of September. Many of you realize that this is the 26th of September because you've heard about this date for a very long time, Debate Day. Maybe I will talk a little bit about it. Every time I want to talk about this, the politics of politics, I keep saying to myself, it's the market that's more important to us. I don't have to get into that. I can think whatever I think. It's the market that we have to deal with. So let's just move right into the market now. Thank you to all our hosts earlier on. Fabulous programming. I hope we can keep that up all the way through to the rest of the day. And now we're going to go. The S&P E-mini futures down 13 at 21.45. This is the pattern I'm looking at. You see this Chapman wave falling axe formation? It says at some point, the resistance level of this dashed downtrend line will become a really important part of the analysis, but only if the E-minis, the December E-minis, can get above 2177, and they're at 2144 right now. That's like 300 and something points for the Dow. It's going to be real tough to do. But the weekly chart says I've got the same pattern, but now you've got to be careful because the MACD and stochastic are rather weak. First of all, the stochastic and MACD in the daily chart was weak here on the left. Let me move this away. You get to the middle chart, the weekly chart, and what we're looking at here is that you're sitting on the 9-period exponential moving average. There's a lot going on. In fact, the question has to be, what could create a vibrant upside move that can have continuous support? A lot of things have to go right to do that. I went through, I couldn't even tell you how many charts, 50, I don't know how many charts over the weekend, daily, weekly, monthly. And I want to go through many now. So let's just get moving right along. Clear parameters. The E-mini down below 2137 says, uh-oh, this is real trouble. You're impacting the weekly, even though it's just the first day of the month, of the week. But it's getting close to the end of the month, and so far the monthly chart is still holding beautifully. 120-minute chart has made a leg F to the downside, needs to bounce right here, or else it's going to suffer further damage. So the weekly chart, technicals are starting to weaken, and that's the S&P futures. The Dow, let me just click on here, and then I'll get this in order. The Dow is, in fact, right now, down, INDU. It's really not a big deal. 118 points. There was a 140-point decline Friday. That was a little deeper than I expected. And the 11-point decline in the S&P here is important. Why? Because the Dow really needed to get to the 18,500s at this particular point for the weekly chart, the daily chart, even the monthly chart. So this is negative, and one of the reasons why we're on the short side. And I have to tell you, there's something here that's going on that has me a little bit nervous in terms of what can happen by this coming Friday, because Friday is the end of the month. Friday is also the end of the week. And the weekly chart has that failed pattern on the right. It's called, first of all, it's an H pattern. But it's like a right shoulder failure. So I want to see by the end of the day into tomorrow, because we have a couple of things going on, and I'll talk about that in a second, that are unfulfilled daily buy modes. I want to see some kind of a balance to ameliorate some of the selling so that we can get to like a minus 50 in the Dow today and then have a nice spike tomorrow for whatever reason. I'll talk about that reason in a moment, but let's just go one at a time. Daily chart of the Dow, sell mode. The weekly chart of the Dow is still in a sell signal, but it'll be a sell mode if it takes out the support right here at 17,850. That'll go to a sell mode. And that's on a weekly basis. That means by the close of Friday. And the monthly chart is going to be very important because 17,895 is a 9-period moving average. It hasn't closed under that since it spiked up above it on the 3rd of, in March, that is. The 120-minute chart is pulling back sharply here. This is going to be very interesting for two reasons, because I have to go to this, the VIX index, VIX.X, was I showed this chart the other day, and by any measure, the weekly, the daily, the weekly, and even the monthly charts were very negative. However, they were in an area that said this is where in the 11s, in the VIX, the volatility index, which I treat very simply as a measure of buying and selling pressure, when it goes very high, then I do go with the normal format, which is to say that it's a fear indicator. But every other time, it really is just telling us how much buying and how much selling there is in the market. And at this particular point, at 1387, if by the end of the day it slips to the 1360 or lower area as the Dow pushes higher, that'll be a little bit of a. I need 2 days. I need Monday and Tuesday. So let's say that by Tuesday, the VIX is in the 15s and the Dow is down below 18,000 and the S&P is down below 2138. That's going to be very negative action, and that portends weak prices right into middle of October. I'm still expecting weak prices into the middle of October. I thought we might get a little bounce first. So the VIX index slipping below 1360 with the Dow going minus 60 and having a decent day tomorrow would say, okay, there's a chance that we could just struggle with some of the sectors like the semiconductor index perhaps and the QQQs having that leg D, that missing leg D. Let's go there right now. So no, first of all, the S&P, just to complete this thought, the S&P is down 11 at 2153. See, that weekly chart's a little bit better than the Dow, but both the daily and the weekly charts are technically sell mode in the daily, sell signal in the weekly, and the sell mode kicks in at 2118. Well, actually, it's quite a lot lower down, 2153 right now. But on the upside, if it can sustain some kind of a move by Wednesday and holds into the 2168, 2172 area, I would have to say, hey, that's good. That's good. And the monthly chart is still very positive. QQQ series, here we go. QQQ, I don't know how it's going to get to 119.23 for leg D, but I have to tell you, there's no other way I can count it. This is peak C. And it's very unusual to go to pretty much recovery highs, almost all-time highs, and fail at a C. However, that's how it is. The weekly chart is still very strong. Monthly chart is very strong. There's no sell signal yet, even in the technically, it might be at the end of the day, but so far, no signals yet in the QQQ series. Gold right now is up $3 at 1344. I said to subscribers, 1355 is really what you want to see gold break to the upside. And the dollar, and this is going to be a very interesting week because I'm suspecting that we're now running out of time to go sideways in both the dollar and gold, and that by Wednesday or Thursday, we might actually see a bigger move. So far, the dollar is down below the 9-period moving average, down 20 at 95.28, and it really needs to get to 96 to show that it's got internal strength, because if it breaks 94.60 on the downside, that means the dollar could go even lower. So that's the dollar. Let's go to the EUR-USD. EUR-USD. There we go. A nice move to the upside, holding the support level in the weekly chart. And crude oil CL, crude oil right now is up $1.60 at 46.08. Isn't that interesting? And the market's down. And the TLT, here we go. TLT is up 41 cents at 137.23. Basil Chapman, I'll be right back off these very important messages. Dow's down 135.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Whoa, a lot of questions, a lot of email stuff. Let me go through this one at a time here. First question was AKS, which is AK Steel, trading at 513, up 17 cents. SCHN, and that's Schnitzer Steel, SCHN, Schnitzer Steel, Schnitzer Steel, trading up 11 cents at 1983. It's already made a peak B. And what have we got here? We've got X, which we've been wanting to buy since Thursday. We've missed it every day. Up again, up 47 cents at 1943. This is that rotation that I keep talking about, and that's one of the reasons why I don't know yet. I will know very soon, I think, whether or not this has the capacity to see the weekly charts really cascade to the bottom. I mean, to the beginning of the rallies. That is, that would be like 12 to 16% from their highs. Or whether we're just going to chop sideways as the same thing that goes on in the debate. Win one, sort of win one, sort of lose one, sort of win one. I'm looking at this, and I have to tell you that I think that if the market's going to rally tomorrow, it'll only rally. I'm not sure it'll rally that much on a Trump perception of winning, but it might do that because the market in general likes status quo. In other words, the market likes kind of what it knows, even though it really doesn't know, but it thinks it knows. And that is that Hillary is status quo. And therefore, if she gets some kind of a little edge, and Donald, I mean, if she calls herself Hillary, I have to call him Donald. If Donald doesn't get that edge, then maybe the market will say, hey, phew, now we can have a bounce, and we'll have a bounce. But I'll tell you the only reason why I mentioned, so that was the answer there is, yes, it looks like there's a rotation going on. The steels are benefiting. I think that's partly to do with the, if you look at the FXI, it's actually holding pretty darn well. It made a peak at G, actually, or it's an alternate G/C. So it's holding pretty well in this high-level consolidation, and that suggests to me that maybe they are doing some buying, and maybe the steels are benefiting because of that. I'm not sure it's internal, because Ford and all these other companies mostly use aluminum, but they're involved there as well, are not doing anything. So now let's go back to what I want you to look at. There were questions about, so the crude oil, you see, crude oil is having a nice session today, up 168 and 46.16. But it's all within this trading band between the 43 level, call it 42 level, give it the widest berth, and let's call it 47 for crude oil. But if you look at gold, gold is also in a pretty much trading band trap. And it hasn't been able to break under 1,300 and hasn't been able to break above 1,360. So I'm suspecting that if it does suddenly break into the 1,355 level, suddenly we've got the chance that gold actually starts to break this. It's within the rectangle formation that I outlined way back. You remember I drew this in a long time ago. And it's within that band, but it'll break the downtrend line. And that says, okay, go a little further. And coincidentally, that would mean that the dollar is going to take a dive, and it will go down below 95.50 and start to test the lows. But there's this trend line that's so important, same as what we're looking at as resistance in the gold. And the trend line on the upside here is a support level at about, so it's this week, 94.80. Let's call it 95.60. So 94.60. If the dollar breaks 94.60, I think this is a problem. And that's what we're looking at. Now, let me just go back to what I was saying before. Down like this, if the Dow was down 180 points and it had already gone to minus 225, and the S&P was down 26 instead of minus 11, Dow down 124, I immediately be saying, you know what? There's nothing that can be done in the debates. We're in a sell mode. But remember, we looked at the steels. Look at the IBB pulling back here, with a potential for a cup formation. Remember, I spoke about this. I said in the Chapman wave methodology, spent a lot of time on this. There's a pattern that I look at, and that pattern is the handle and cup, not the cup with on the right side a handle, a little handle. This is the other way around. There's a little double top Chapman wave. I should have got my CD already, and I didn't. Chapman wave double top from the 299.48 high. Back, what was it, 2nd of August, 4th of August, and then all of a sudden it comes down a little bit to the 288.7-ish area, 288 area, and then it bounces and it makes a slightly 299.25. It just misses, making the double, making a breakout. Instead, it makes a double top. My rule of thumb is one third to a half lower, and you're bound to test the cup low at 288. You break that, close below it, and there's a real good chance you can have a 1-to-1 to the downside. That's exactly what we got. In fact, we got a little bit more than 1-to-1 to the downside. It went to 276. So 300 to 288, 12 points. Should have been 276. 276, exactly a 1-to-1 to the downside. And then it gives 100% gain to the upside, just over 100%, and it goes to a new recovery high. This is the IBBI shares NASDAQ Biotech. Hey, wait a minute. It's holding the 9-period moving average. The MACD is MACD is strong. The histogram is pulling back a little bit, but it's still very strong. And the stochastic still at 91%. I'm telling you that we've got to watch this because I know the pattern very well. You remember what I said? You go from the handle to the cup, and then you make another little handle, and then eventually it tries to run in and breaks down and eventually takes out all the lows below 276. So I'm anticipating that there's further upside to come. No, there could be further upside to come in the IBB, but only if it holds, and I would put it right there at the midpoint, the 291 to 291 to 289 area. A break under that says, no, you're down. You're going to make an even bigger handle on the right side. So this is a pattern that says upside very limited, but there is upside potential. And it just squeaks to modestly higher highs, higher recovery highs in this case. The all-time high was 400.79. Okay, so we, in my opening call, we do not have any position in the IBB for a little while, because I should have. I thought we had a good chance. Do you remember everyone was calling us? Said, be careful, because there's a chance that fund managers who really lost out for the first time when it was going down all of 2016 so far and part of 2015 are going to say, hey, it's holding steady. This was a great area. I'm going to go in. I think there's more safety than risk. And that's really the thinking. Not that they can go very far, but that it's good to get them when they're real low. These are biotechs. I think that's going to turn out to be a mistake, but for now, that's the thinking that might work. So now I do one more thing. I want to go to the TRCCI, and then I want to start this whole thing, the review IBD 20. I won't go through the 50. I'll go through the 20. Look, this is the, here we go. The Thomson Reuters Continuous Commodity Index Monthly with a Chapman wave notation. And that says we've made a peak A, but we're still holding above the 9-period moving average, and the technicals have actually been improving. This is for commodities. This is very interesting. The weekly chart says, hey, you might think it's recovering, but it's still partly in a digestive phase after a spectacular single move that's gone in this particular index from the 351 area all the way to the 438. I would say that that's a huge gain. Now it's consolidating, but can it keep going higher? That's the question. So we'll talk a little bit about that, and then I do want to do stocks that I think are very important to be looking at right now. Basil Chapman, Tiger Technicians Hour. Dow's now down 143, S&P's down 14. Whew, tough session. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. So here we go. TNX, that's the 10-year yield, is down 22 cents at 15.93. It made a peak right at the 200-period exponential moving average, just repelled from that level, pulling back. I just don't see what the Fed can do. I think this is bad economic. I think we're in a bit of a recession, actually. So this is what I'm looking at. There's a chance that we're looking at the H pattern in the weekly chart of the TNX. The only way that'll change is a move into the 18s, and that'll be very positive. But so far at 15.93, 1.59%, not good. And that monthly chart is not looking too great right now. So that's that. I want you to look at a couple of questions. 10-year, the USD GPP, that is the Great British Pound US dollar. That is trading at, the question is, does this look like it's going to make that dreaded that H pattern that goes to the lows again? Well, it looks like an H failure pattern right now because it's gone to an a B, C, and it's gone to a D. And that suggests that the pullback is the Eiffel Tower look to it. Goes straight up, straight down. So the Greater British Pound at 1.2975. A break under 1.290 right there. A close below 1.291 would be very negative and suggest we're going to retest the bottom. Does that make the dollar rally? Well, this is the whole thing. That's what we're going to be looking at. Now I have to tell you the Dow's down 0.81% at 147. S&P's down 15. There's a dichotomy here because the S&P, the 500 usually are a little bit weaker or stronger than the Dow on a percentage basis. I happen to like that when I see that 300 stocks slightly better percentage than the 30. This is different. This is the other way around. So we're looking at some intense selling here, starting to kick in. So that's that. Another question. I had one more question over there. Okay. Oh yes, Deutsche Bank. I said, don't touch Deutsche Bank. One night you're going to wake up, one day you're going to wake up, and overnight there's been something that's amiss, and it just gaps down. Whoa, gap down 7%. It's down at 1188. Don't touch. DT for DB. Just have nothing to do with it. Don't try to get a bargain because it's going to cost you more money than you could make. Case closed. Okay, now we're going to be. There will be a time when it's right, but not now. Okay, here we go. NetEase, NTES. Number one on the Investors Business Daily IBD 50 list, and it's made a peak D in the. I can't put a down arrow yet, but I'm pretty sure it's real close to giving a sell signal, and that could quickly go to a sell mode. It's at 240, down 7. The high that was made just, if I can do this quickly, there you go. The high, oops, I got knocked off. Al, I'm sorry, I'm going to sign in again for the IMs. Something happened. Why it got timed out? I have no idea. But anyway, and it's a G, an unusual G in the weekly chart, and that suggests that it could still go higher. It needs a little bit of a digestive moment and a leg E in the monthly chart. NetEase, this is a Chinese, I believe, ad. They do it. Let's see, IMs, got it. Something happened. Let me just, please, let me just check for a minute. No. Okay, no one waiting. Good. So here we go. This suggests that we're making some kind of a top here, and it's a top not of consequence, but a top that could be of time. And at 240, I think that there's a chance that it could go down to the 226, 220 area over the coming 2 weeks, and that's going to be a big test of strength. That's number one. Ubiquity. Networks, another networks, UBNT. This is trading with the peak D made. Oh, there it is. The peak D in the daily. There, look, there it is. Peak D/B, because it's still holding pretty well, even though the technicals, the MACD is very much lower, and stochastics at 78%. The weekly chart is in a leg E. And there's this cup formation, and I would suggest Air Fiber Wireless Network, Ubiquity Networks, UBNT, up 45 cents at 53.65. I would suggest that these are the kinds of stocks, at least for this period, if you want to look at long stocks that make new highs tend to continue doing that. Let's look at Gigamon, Gimo, G-I-M-O. Gigamon is appliances to help performance security. I like this very much. I'm just not sure I want to be buying it right here at 53.81, even though it should go to a leg C and D. There's no other way I could count it. And that takes you to over 55 round number high. It's holding well. So here's another one. Keep it in mind. In fact, I'm making a list now for in about 3 to 4 weeks' time. These are stocks that I hope to put in the a couple of them in my newsletter so that we can buy them. I hope there's a nice pullback. Edwards Life Sciences. This is different. Edwards Life Sciences is trading at 119.08. And I think this one, in fact, is getting a little bit toppy. I think it's going to be pulling back and getting back into this resolution area that said the rectangle formation allows you to go above, but you invariably come back in. And this says to me that at 119.18, and just 3 days ago went to 121.58, an all-time high. It's got peak D in the daily, leg D in the weekly, and a leg G. So this could be, I didn't put it in, I meant to do it for subscribers over the weekend. I meant to put that in as a Chapman Wave instant restart. That should be G/C. I think it should be pulling back. Maybe not all that much, but we'll see, because once this thing starts to move, it moves very quickly, both up and down. So 119 goes to 121.59, a new all-time high. I don't want any part of shorting it. That's just way too much strength for me. Grub. GRUB, here we go, GRUB. And this is Grubhub Inc., mobile takeout platform, 41.90. It's also gone to a peak D, but it's holding quite nicely right now. I wouldn't be shorting it. I'd be looking to buy this. In fact, I'd get it in my mind that even though you could short, I really would like to buy it in a pullback at 41.90, somewhere in the 38 to 36.5 area. Let's see how it holds and then make a decision. NVIDIA, we've followed this for so long. NVIDIA, I remember the call that we got a long time ago. Someone has said that they're short. They're quite heavily short. And I said, I wouldn't be short this stock. And look at this. It's a spectacular stock. It made a very unusual Chapman Wave peak C1, C2, C3. Triple top in the 63, 32, 38 area. Pulls back really sharply to 57.31 on the 12th of September, and bam, it runs up. I think it's still going to go to a D. I like it. NVIDIA core graphic processing for workstations, etc. Let's go on. LGIH. I've never owned the stock, LGIH. And I keep looking at it every time I see it in Investors Business Daily, and it's so spectacular. Now I think it might have made a Chapman Wave 5 in the weekly chart, and it's pulling back quite sharply. It's gone from the 40.47 area on the 7th down to the 34.18 area on the 9th, and now it's just chop sideways. So I'm going to be watching this. I'm not sure I'd actually short it, but I'm watching it because it's been one of the very best housing stocks. So Basil Chapman here, Tiger Technicians Hour. We've been going through a lot of these NASDAQ, the IBD top. In this case, we've been through the top 7. But I wanted to do something else. I had a question about Elliott Wave and Chapman Wave in the monthly charts. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman. So I had a question about the Elliott wave. I've started to, for a while now, quite a while, I've been mixing up Elliott wave with Chapman wave. In fact, I've kind of left Elliott wave because I find that together with my work, what I've been doing, I'm getting a much better structural configuration on the Chapman wave. However, in purely Elliott wave terms, the question was, have we started wave 5? And the answer is yes. This is my opinion. There might be other Elliott wave specialists that consider this a B wave. There are other configurations. I really try to keep it as simple as I can. It's worked very nicely. We got that exactly, the high that was made in 2007 as 5. I did it as an Elliott wave. That wasn't the trade. It was just looking at it as a potential, and it did work out. But the fact is, it's the one that we were looking at to say wave 3 should come in. This was last year when I did a webinar back in February. I said we was expecting wave 3 to complete, wave 4 to come down, and then the moment we take out the high of wave 3, it starts 2 things. In the Chapman wave monthly chart, it should start a new move to the upside, and in the Elliott wave. And the Chapman wave, what we're looking at here is if you go to the Dow INDU, what you're going to get is INDU. I always type into the wrong place, and I type into a spelling mistake, but this time I've got it perfect. This is peak C. If there's no new recovery high this week, I don't know how there can be a move above 18,668 this week by Friday. If there is, it just extends leg C. I think we're going to make a peak C. And the really big question is within the stalk wave, Chapman wave stalk leg formation, where are we? What are we doing? We've gone back under 18,351. What are the implications? How do you get out of it? Is this still the neck? Going up, or is this the neck with the head concluded? Whole bunch of implications coming up this Friday. My thinking right now is that we're going to go one step at a time, and the weekly chart is the absolute clue. So the answer is yes. In my work, we're in a buy mode in the monthly. It gets negated. Interestingly enough, it has to go all the way down to 15,500. Actually, I probably should say it has to go to 15,369 to negate the potential for this to go to all-time highs. And that's just how it stands right now. It's just a waveform, it could be wrong, but that's what I'm looking at. All right, hope I made that clear. What does it project to? I'm always loath to project. If you can't get through one level, how can you even think of other levels? And my level to go through before I can even really give a projection will be 19,000. So 18,990, I've said for a while, is going to be a really strong sticking point. But in the big picture, you want to have a target. This is purely a measured move, and the measured move says somewhere in the I'm not even going to mention it. Somewhere above 20,000. Not that far up, but above 20. But I don't even want to talk about it. Only for those who are looking at their long-term portfolios, I still believe that we will go to higher highs, and that's key. Hope I answered that question as clearly as I could. Now, let's go back to the story. Within the context of, here we go. Within the context of looking around the world, you've got the EEM, which has held pretty darn well. It's almost like the FXI. It's almost as if, America, you've had your chance. You've done very well. Now you need a bit of a breather. Now other countries need a little bit of a catch-up period. And we're looking at the EEM, which is the iShares Emerging Market ETF, holding pretty darn well so far. It's down there. That's not the big red one. It's not what you're looking at. You're looking at it down there. So you've got to put it in the context of digestive phase. I'd love to do it. I'm going to do it. I immediately see an oval formation here. And it makes it very, very clear that the EEM, if the EEM takes out, it's not that far away, but if it closes under 35.85, then I have to take that's a different pattern that's unfolding. So 35, so it's only a point and a half lower. It could do that real quickly. But I really do think that there's a consolidation going on, and it's rotation. We saw on the SLV, what was it? The silver, steel, SLX. SLX doing quite nice. Yep, there it is. Oh, same kind of pattern. SLX, the EEM doing very nicely. So that was a question, and I hope I answered that as clearly as I could. For GT, EWG. EWG is the German ETF. Now, these don't track exactly the same way as the indexes. I used to think I could use them, and then I stopped a long time ago saying, no. They made up of select stocks that are different. And because of that, I can only say, as an independent chart formation, I'll show you in a minute, you've gone to a peak F, you had a spectacular pullback with, not spectacular, a big pullback for this, and then a spectacular bounce up 3 days ago. Now it's giving it almost all of it back with island patterns all over the show. But in my weekly chart, I have no other choice but to conclude that this is still peak B, and it's holding very well. So EWG, and this is the thing that we're going to be looking at. If I go to the dollar DOW, I really must call TradeStation and ask them, what the heck are the index? I keep, for years now, I haven't had the indexes on. I used to get them all the time, and then they just disappeared. So I use the Dow Jones Germany Stock Index. It looks very much like the actual index, but it's a different price. And this is in the middle of a range. It's just stuck. It's made a peak C in the weekly. So I'll just tell you that EWG, let me go back. Keep your eye on both of them, the left one and the middle one, the weekly. Here we go. See, it's almost the same as the EWG chart, but it's not exactly the same. So I always say, just be a little careful. They kind of track together, but not exactly. So I'm going to say to you that I'd be a little careful here. It's holding pretty well considering what Deutsche Bank did, but I think there's a consolidation here as well. It's at 26.07, down 37 cents, down 1.4%. So that's bigger than our indices. Just be careful because a close below 25.40 on the EWG, that's the iShares Germany ETF, would be pretty negative and suggest that it needs more time and price on the downside. But if it just holds steady here for the rest of the week, holding 25.50, not breaking above 26.50, just kind of going sideways, that would be very good. But the daily is in a sell mode at this particular time. All right, hope I helped you there. So now I wanted to go through to a couple of other things. So GE, this is my bellwether, my Dow Bell. Horrible action, down 23 at 29.66. I showed my subscribers, I just had a whole discussion about this pattern here. It's not doing very well, and as a bellwether, it's saying, hey, just be real careful out there. IBM is one of the 4 Dow index stocks that are not good. It's down $1.35. The peak E, this is, I have to put a down arrow here. And I would suggest that the sell mode is not just the daily, but it's in the weekly chart and the monthly chart of IBM. This is IBM. hasn't been able to break that long-term downtrend line, and it does that if it can get to 163. It's at 153. A lot of work to do. Triple M should have done much better. It had a fabulous move spike up the other day to 181 from the 175 area, and now it's way down at 176.15. Not good. And the weekly chart has made a peak C1, C2 potential for a double top. So we'll see what happens here. And the monthly is holding very, very well. And we'll look at UTX when I get back. Basil Chapman, the Dow's down.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Yeah, that E-mini, the 10-minute, it just keeps it made a peak F. It rallied, not very much higher, but it did go all the way from 2144.25 to the 2150 area. Yep, 2150 area. And now it's trading down at 2141. So the lower lows and lower highs is something that you've got to take into context here. You've got to say, lower lows and lower highs is a little different to what we've seen for a while. We saw that on Friday. We've seen that again today. It's going to, now you've to get to the 18,106 on the Dow, to get to even the 18,350s. That's a lot of points. A lot of points. I mean, after all, it's the same amount of points down as it is up. But the thinking on the way up is that things are good. And we're looking at the market interpreting whatever is going on here as negative. Let me just do a couple of things. One is, you've heard everyone's given a spiel on what you're going to be looking for tonight. As far as I'm concerned, there are a couple of things that are really important. One is, I need to hear some articulation, a little bit deeper into the logistics. I want a little more statistics. I want a more refinement from someone like a Trump going after the voters who are undecided, but are not really undecided in the sense that they don't really know which party to vote for. They're actually undecided about the candidates. I feel that it's in both cases, both Democrat and Republican. So you can't keep saying many, many, many. You've got to say many once. You can't keep repeating these things. You've got to articulate your thoughts. And within that, you can do whatever you usually do. But you've got to add to it another dimension of sober thoughts that people can actually say, wow, I like that. I haven't heard that, haven't heard it articulated that way before. I might disagree, but I like it. On the other hand, with Clinton, you've got to have something has to happen where you don't get this robotic expelling of information. It's got to be refined, articulated to exactly what the question is. If there's any, you can't have too many obfuscations. You can't have any bypassing the question. And I think the moderators are going to be very, it's really a very important thing, because the moderator is like a conductor who slows things down or speeds it up, and the audience doesn't really know, but it's these little gestures that keep things either on track or off track. So that's going to be really important. 90 minutes is a really long time if things are not going well. 90 minutes is, it's never too long. It's always too long. It's never too short. So it's going to be really important to keep the flow, and you don't want the audience just fading out after like the first 15 minutes and then have the repeat of the same thing over and over and over by either of them. This is a challenge, and I think the market is saying, hey, this is a challenge that is different to what's being articulated in the media, that they've got this, they've got. I think it's real clear. You've got to see a slightly different person on both sides, and you've got to see a person that people who are wanting to vote for them, but it just haven't really pulled the trigger yet. Oops, wrong term. Haven't really pressed the button yet. They've got to see something different. That's my impression. This is all television. That's television is physical. It is very important that points are made, but you know what? It is the physical impression. That's what people look at. What is she wearing? You know, all the stuff that you would say, what, President? Those are the things that a lot of the audience look for. Moving to the right, is he too tall? Is she too, well, just all sorts of things. So it's going to be fascinating as a demonstration of repose. Hey, I'll see you tomorrow, and we'll know. And we'll be able to see what the market does. Watch very carefully. Watch the VIX, watch the Dow, down 150. It's going to need a lot of points, and the VIX is really going to come down sharply to the 1360s to really make a difference. See you tomorrow. Good luck.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.